Hello, everybody, and welcome to the Mortgage Broker Builder Show with your host, John Jurkovich.
Okay. Well, awesome. Super excited about today's show. And we've got a very, very exciting guest here on the Mortgage Broker Builder Show this week. And one thing, I like to kind of back up and just tell you guys a little bit about what this show is. We're here to do three primary things. Thing number one, we want to help bankers become better. We want to help bankers become brokers. And ultimately, we want to help brokers become better. And I've gotten and received a lot of feedback that they wanted to hear from actual brokers that do this day in, day out. So I've got one of my larger fans that is a ride or die for me that will agree to do things for me here today. It's my wife, Natalie, who is the founder of Brick Financial Group. They started early 2020, have closed thousands of loans, and I just believe do a fantastic job day in, day out of running a small business, a mortgage company, a mom trying to juggle it all. And super excited to have her here today. And we're just going to go through, and we're starting a series now where maybe every third or fourth show, we're going to go behind the broker, and we're going to interview brokers and just ask them a bunch of different questions about what they do day in and day out. So Natalie, welcome. How are you?
Thank you. Good. Thank you for asking.
Yeah, exciting. A little bit weird, right? Like I'm interviewing my wife on the internet. Don't know that when I was a young kid, I ever thought I would be doing that, but here we are.
Here we are.
So what I wanted to just kind of step back and just tell us just quickly, and we're going to go back in time and kind of just talk about how you got started in the mortgage business and those kind of things. But just tell me a little bit about Brick Financial Group, kind of where you stand today. And like, how was your May or I guess it was your April. How was April? How are you feeling? Like, how's the business doing? I know you had a big April yourself.
I did. I had my best month in a long time in April. We closed just under 30 loans. We have 5 loan officers. I would say probably 3 of our 5 loan officers are relatively, full-time working, 40 to 50 hours a week. The other 2 are, in and out. But yeah, I mean, we are primarily, I feel like we're like 97% purchase right now. So almost all of the business that we're doing is direct with real estate agents, which is a big contrast to where things had started when we opened a couple years ago. Also, I mean, outside of that, we're trucking along, I mean, we're not like making $1 million, but I mean, we're doing well enough for the market.
And yeah, I mean, I see what you guys do day in, day out. Like in the last year, I think you guys did somewhere around 350 closings. And that's 5 plus like 5x, 6x what the industry average is. I know that we talk all the time. You don't really care too much about the industry average. You care more about what your potential is and what you think you guys should be doing, which I think is just a testament to the way that you conduct your business. You don't really care what anyone else does.
I mean, it's embarrassing to say, in my opinion, just based on like my career and the best months I've had, and even, what I would consider my worst months, like there should be no pride in closing 5 loans a month. Like I just like have zero pride for that, and in April, I mean, I closed 14 loans personally, and I'm very happy with that. I still think that I could have done better, and it's less than half of what my goal would be, as far as like how many I think I could close in a month. But I don't like to compare myself to shit and then, be like, well, everybody else is only doing 2. Cause I mean, really, I'm in competition with myself. So.
Yeah, I feel that our industry often just as a whole gives themselves a pass because everybody's kind of mediocre. Mm-hmm. And so if you compare yourself to that, right, if the standard you set is that of the average person, well, it's pretty easy to get above that, right? The Navy SEALs wouldn't be the Navy SEALs if they compared themselves to, the average guy attending a college football game on a Saturday. Pretty easy to beat that person. So let's go back in time. I've known you for a really long time. How did, like, nobody wakes up one day, like as like a 17-year-old and says, I want to get in the mortgage business. So just, we're going to go quickly back, like kind of through your career, how you got here. How did you end up owning a mortgage company? So where'd you start?
So in 2007, I started at Rocket Mortgage, which at that time was Quicken Loans. And I was 23, fresh out of college, had literally no idea. I mean, I got recruited from like an online website somewhere and they were like, hey, do you want to be a loan officer? And I mean, I had worked on commission at like every job I had since I was 16 years old. So the idea of like having a base pay and a commission, I was like, hey, like, I've done this before. I can probably do it. I knew that loans had interest rates. Outside of that, nothing. Went through Rocket's training program. Rates were like 7%. I was making 250 calls a day trying to get like one person to let me pull their credit. So that's how it started. Things got significantly better over time, and by probably, what do you think, 2009, we were like in a little mini refi boom. Rates dropped to like 5.99. We started to make good money. I bought a house. I did all these things. And then in 2011, you remember this?
I
uh,
do.
John and I decided to pack up and leave the state. I did not know where I was going as far as like what lender I was going to, but I figured, I mean, I can do this anywhere. There's no way that I can't do this at a different place. Like I just believed in my ability. And at that time, I mean, looking back, I was closing 45 loans. You know what I mean? Like there was a lot of business being done at the time that we left. So we decided to move out to DC, took a job with a company called Westar Mortgage, which the draw there was that they were a Costco lender. So I felt like, they would have the leads that I would need because obviously I was not generating my own business at that time. Ended up staying at Westar for like 8 years, literally 8 years, which is a long time. I mean, I've only worked at two places outside of running my own business, which for a 17-year career, I think I'm proud of it. I mean, because a lot of people do jump around. But anyways, I was there. John and I came back and started a branch. You remember that. Worked there for a long time. And then in 2019, I got pregnant with my second baby and decided like, oh, I'm going to, become a broker and like, let's see how it goes. So that's how the idea started. It changed a little bit. And we got the branch or the, company started in the summer of 2019 and we were live January 1st of 2020. So.
And just a funny story. A lot of people, and there's people on here that work at like the big red machine, what is Rocket, right? And you get this warped sense of what it means, right? You said you were doing 40, 50 loans a month and you were constantly, you'd see your name in emails all the time for top production there inside of the company at that time that had thousands of people. Tell me a little bit about, I have a very funny story. I'm trying not to out you on things, but there is a large trophy in your room, in your office there that you received. So when you went and you left Rocket, and you went over to Westar, tell me a little bit about your first month there working at a company that was not the most technologically savvy company in the entire mortgage space. Tell me a little bit about that transition.
Well, I mean, I don't know about the first month, but I remember probably 2 to 3 months into it, I had like over 30 loans in my pipeline, which was like insane for this place. You know what I mean? Like they didn't have a real CRM. Like you got 7 leads a day that were manually allocated to you by hand, and you had to like find ways to keep going through those leads and trying to convert them. And I remember another loan officer walking over, I was like, I'm literally like not well. I can't deal with my processor. Like, at Rocket, they were taking care of everything for you. So it was a big change. He came over and he was like, these are all your loans. And I was like, yeah, they're all my loans. Of course they are. There were 32 something loans in there, and to me, it was normal because I was used to having like that many loans, but I wasn't used to having to do all the work, so at Rocket, they did everything for you. Homeowners insurance was taken care of. And outside of like arguing with the client care specialist at some point, which is what they used to call their like, go-betweens between us and underwriting, there really wasn't a lot going on. So I went into my boss's office, well, probably my boss's boss at that point, who might even be watching this, Mike Peoples, a little shout out there. And I was literally crying and I was like, I'm quitting. Like, this is ridiculous. I can't get any of my loans to close. I felt like the client experience was terrible, but the transition was hard because I didn't know how to take care of the loan. I didn't realize how many things went into the loan that I was protected from in my first position, So at Quicken, where everything was handled and they had departments that did all these things, I was responsible for a lot more stuff. So I always tell loan officers, even now coming out of Rocket, like it is going to be a very hard transition, for at least the first 12 months. Because you don't know how much you don't know, which is something they also used to say at Quicken. You don't know what you don't know. That is still true to this day. So.
Yeah. And I had a unique perspective in that she would come home every day often there was a lot of tears. She had a long drive back and forth from where we lived in Bethesda to where she was. And she would come home crying. And then I remember she got like a $60,000 paycheck. And she's like, okay, now it all makes it now all makes sense. Cause those same 40 loans at Quicken got you 12 grand. And
Yeah,
now
but
you
then they
get,
changed the comp. They did change the comp. We started getting like, I mean, I don't, this company was great. And like these guys were so good. I mean, I did end up having to like leave there for a month because I had like a medical issue and they closed all of my loans for me. And I was just thinking about this the other day. They closed every single one of my loans in my name and paid me in full. You know what I mean? Like they took great care of us, but they didn't have the money behind the machine the way that Rocket had the money behind the machine, So yes, compensation changes and things change, but I really felt like when I started there, the market was also changing. And I'm not saying that I was responsible for anything, but there was definitely a shift and things got a lot more competitive. And, you always say that like when you have that one person like in the lead, it pushes everybody else to be better. And like a year into it, everybody around me was so much better than when I had started that I feel like that was super powerful. And I think about it in this market too. Like imagine if you can get that one person that's doing 14 loans a month and it pushes everybody else to try to do 14 loans a month, not just be sitting there saying, oh, well, if I do 5 and those people do 2, like I'm still doing better.
Yeah, the standard you walk by is the standard you accept. And I think that when you went there and kind of at different places that you've been, you're not very good at accepting a mediocre standard. Right. It's not your super strength. It's not like allowing people, in around you to be mediocre. And I think that you bring up everybody in around you. The people that work with you do more because they get that day in, day out, which I think it's a powerful thing.
Well, I think this is worth mentioning at this point too, that I've also realized, through managing people when we did have the branch and stuff, that my expectations for everyone were like where my expectations were for myself, which like you're saying is like through the roof. Like I know what I'm capable of, so I don't just like accept whatever. And I had to do a lot of changing and growing there too, because if I let those people, if I had expectations for them that I knew that they couldn't meet, it just never went well. And I couldn't like help them move forward. So I think that, it's a double-edged sword.
So let's get into, right. You started your own business. And I think that, right, when you were starting it, it was to be a stay-at-home mom, to spend a lot more time doing the mom stuff. And right, it didn't necessarily transition into that, right? And that you may work more today than ever. But, so the business has morphed a lot where you were closing, a lot of loans. What's been, and I said in our little thing, the good, the bad, and the ugly. What has been the one thing that when you were thinking about starting your brokerage that was just a complete misconception that like, it's not at all what you thought it was going to be? Can you kind of drill in on one thing?
Well, I mean, I feel like loan officers even now, and I felt then like somebody else was making like all this money off of my production, I think that I probably discounted a little bit what they had to put into the marketing expenses, to driving the leads, to making sure that like everything was how it needed to be, to payroll taxes, to, all the additional stuff that like when you're looking at this, and you remember when we did like the ROI and, ran everything through like cost wise per loan officer, once we decided to have those, I guess I just didn't see it from that perspective. And even today, loan officers keep expecting more and more and more compensation, but like you have to spend money right now in order to make the money. It's not easy like how it was when rates were 2.75. Our margin was a lot lower then, and now it has to be a lot higher in order to accommodate also increasing prices on everything. So I feel like the biggest thing was just not realizing how much the employer or the company has to do to maintain the employees. And, when I first decided to do this, we weren't intending to have a bunch of employees. So, wasn't really, I was thinking I'd close my past clients and it didn't really go that way. We ended up buying leads and, that spend was large, very large.
Yep. Not when hundreds of thousands of dollars at different points per month just to buy leads. Yeah. So, and I think that that's something as I talk to people about becoming a broker, there is just so many things that you don't understand, just the dynamics of running a business. And I don't think that it's mutually exclusive to being a broker. I think if you're going to open a sushi shop, you're still going to have all of these just problems that you have in running a business. We had Adam Lamb on here a couple of weeks ago and said, 90% of the things you do as a as an entrepreneur are just boring, mundane, and just a pain in the ass to do, right? It's just
Totally.
not easy. So what, and some people had sent me over some questions before, and we'll kind of get into this. What do you guys use right now as far as your tech stack? Like, what's the software that you're using? And I know you say this all the time. Everybody wants me to pay for something.
Mm-hmm.
Like every
Yeah.
email I get, somebody wants me to buy something new that's going to 10x my business. So just tell me what you're actually using today.
Okay. So, I mean, yes, everybody does want money from me. Mostly agents want money from me constantly, but I would say Lending Pad is what we kind of have centered our business around. And when we started, we were using Calyx, which is like nobody in their right mind should ever be using that right now. I think it was more cost effective and we didn't know how much money we were going to be making at the time. But we got onto Lending Pad the beginning of 2021, so about 1 year into it. And then we just kind of had to move everything around Lending Pad because once I was in there and I knew the system, I just like didn't want to make another change. Plus, as you know, we had like 20,000 leads that, didn't have a place to go. I had to move my CRM. So now we're using MLO Flow, which you referred to me. And I really like them. And it's a two-way talking system with Lending Pad. And both of these systems, they don't do everything. No system does everything, but they do enough things. And then we added in Empower LO to kind of remarket to those leads that we have. We use Outlook just because I've been using that for my entire career and I wasn't about to change to Gmail. And outside of that, I mean, what other systems could there be,
Well, when I look at your tech stack, you have things, from the outside, you have Model Match, which you may have
Oh
just
yeah.
switched to, you have
And
HomeBot.
MMI. I have both of them.
Yeah. And you have HomeBot.
Mm-hmm.
And you've got, there's other things there too, right? Like other tech
Banking
things.
Bridge. Okay, so
Banking
I have
Bridge.
Banking Bridge, which I connect to my website, which I feel like is super valuable. That's been like a big tool for us. MMI, Model Match, HomeBot, which I have currently 4 out of the 5 loan officers in the office, including me, have their own HomeBot for their clients. And we're trying to figure out at this point if we should move HomeBot into like one account for everybody or, keep it separated because it's not cheap, but I do feel like a lot of the business that we get comes from there. And some business I can draw, because it shows you how many clients are your top clients that have like looked at stuff on HomeBot. And I can go back to that and be like, oh, well, William was just looking at his HomeBot. He was one of my most clicks. And now he called me for a loan. So probably the correlation is there that William thought of me because he got the HomeBot stuff,
Yeah. And for anybody that doesn't know, HomeBot is a service where you can put in your close clients, agents, close clients, and it sends them an email. I think they get 2 emails a month that talk about their current property value, some different things. So it's really a nurture campaign on the back end. And there's a variety of different things. I actually have a coupon code. Somebody sends me a message, I'll get you a coupon code there where they waive the setup fee. But it's just a good program. It's a good door opener for real estate agents. We have another thing that we're actually launching with a FinLocker app that she doesn't know about yet, but that will do some of the exact same things. But it's really important as you start looking at what I've noticed is as you start looking at what you're going to spend your money on, that they're very focused, right? Either it helps you bring in a loan specifically, and you can say, I'm doing this because it helps me bring in a loan. If it's in the middle, you're doing it because it helps you process and close a loan more effectively. Or if it's on the back end, it helps you nurture your clients. And if your tech stack today, anything that you're paying for, if you cannot directly contribute it, when I do A, B happens, I think that it's not money well spent. And I know that you've done a really good job of you've been through a bunch of CRMs, but you also are very passionate about I'm not spending money in this market on something that doesn't bring in money.
Right.
And you've tried a bunch of CRMs, right? We started with Incelerate back when we first got going. They were pretty good. I know you've had Shape. You've had some different things. Any just pitfalls that you see or trouble that you see with tech and I'd say you're relatively tech savvy. It's not like you're not an IT major, but on a scale of 1 to 10, you're a 7. Is there anything that you've seen?
Well, I feel like I'm not tech savvy at all. But I mean, some of the stuff that, that I see in their problems is that is mostly coming up from when you're transferring from one system to another. So in the position that we were in, we had so many leads and so many clients in there, and maybe we weren't doing the best job of like statusing them correctly, but moving from one system to another, we left behind every old lead. Remember the thing that we did with like Empower LO. So we didn't transfer any old leads into the new CRM. We just started fresh with a new CRM that had a POS inside of it. And like this has been a big change for us for the better, having those two systems in the same place. And we were using Flowify before, and I love Flowify. I wish I could use Flowify forever, which I know that they've changed a lot of stuff there too, as far as like what they're doing. And I would love to go back to them, but at this point, we have the POS and CRM both tied in directly to our LOS, so now all three of these things are working together. And that's been a huge change. I mean, also being able to do the drip campaigns, we don't make calls out of the CRM. It's mostly just automatic emails that we have going out. So like that's been super helpful. And then just being able, they have these like tags in there, and I never really thought about using this, but you can tag something like needs an approval. Then every morning when you come in, you can see all the 6 clients that still need an approval. So they've applied, but they haven't uploaded docs, or they started the app, but they didn't finish it. So I've kind of resorted to a tag system just because, I mean, like I said, I closed 14 loans last month. I'm getting, 25 to 50, depending on the month, pre-approval applications, and it's very hard to keep track of those. So, having the right statuses in there has helped.
Yeah, and we're on Natalie's business, and like I said, they've used a bunch of different things. We use something called Empower LO really for their back end, to where we can do targeted marketing from the company standpoint. So we've got one way, and there's lots of different systems out there. And then having some type of all-in-one, or getting your technology to work together. And right, she mentioned Flowify. Flowify was great for them because it really worked well with LendingPad and what they were trying to do, but they had problems trying to get their CRM to work. So if you're doing this or you're thinking about it, one thing like that's really difficult that I think is just getting all of that tech to work while you're trying to call on real estate agents, while you're trying to do all of those different things. And it's a struggle for every single broker that's out there. And it's why, companies like Rocket get it dialed in, but they have 500 people working on this full-time every single day.
Yeah, I wanted to reel it back too, to what you were saying about like the money that you're spending and like deciding if it's driving loans. Like, as a broker who deals with real estate agents, there's really 2 forms of marketing. Who is my audience for this? I'm paying X number of dollars a month to be in like Real Producers magazine locally. Okay. That doesn't go to clients. No client ever sees it, but that's a marketing expense to drive agents towards my business, and I mean, we just picked up a 60-person office a couple months ago. And one of the things she said to me, like 1 week into that conversation was, "Oh, it's so funny that we just talked and now I saw your team's picture in Real Producers magazine." You know what I mean? So like, we have different marketing channels, and like, even though some of them aren't bringing us clients, if they're bringing me an agent, ultimately that's going to bring me a client. So I have to kind of look at both sides of it.
Yeah, I have a Post-it note that I wrote down. I use 3x5 cards. They're all over my world. But it's talking about the partners that you have, and you go out primarily, like you're the rainmaker for your team for a lot of things. And then you're taking that, putting your brand, your name on it, the Mortgage Mom Squad, right? Like you're putting that name on it and then handing it off to people inside of your office. Yet you're still ultimately responsible. I know that. And you want to like hug that like it's your child, right? You get this new office and you're handing it off to your loan officers to add value to them. And I feel that a lot of people, when they're looking at trying to grow and scale a business and add employees, they don't add anything of value,
Well,
I think
if everybody can become a broker, like if everybody now in the barrier to entry, is there, and there's people like you out there who are willing to, help them do all the stuff that was holding them back from being able to do it, then why would my employees stay versus just going and opening their own brokerage? You know what I mean? There has to be reasons. And like I said, they don't understand all the stuff that goes into the back end of like how hard it is to deal with each state agency, with the call reports, with, being audited, with like all of that stuff is very time consuming. But to them, they're like, well, if I only do 5 loans a month in my own name, like it's not a big deal. Well, what if I can double your business? Like, what if my bringing in those agents can get you business? And I don't just like hand it off, I'm not just like, all right, here you go. Because I mean, ultimately, I'm bringing in the business and still closing a significant amount of loans, but I depend on my team to be able to pick up the slack with the agents that I can't take every agent. You know what I mean? Like I can probably hold 20 to 30 agents at a time without completely losing my mind. But I also have a production assistant who helps every single person on the team, and the company pays them. The loan officer does not pay them anything. We also have contract processing, which was the best thing I ever did, moving to a contract processor. And we just took our in-house processor and moved him to an outside company. He's making more per file and we lost the expense. So like a lot of the transition we've made is about supporting the people inside of the office.
Yeah, I think that you guys do, right? Looking at it from the outside and right, granted, we're together, but we don't talk a lot about business at home. We got 2 young kids, and right, like when we're home, we're like, we will talk more about business right here than we probably will over the next 10 days. So it's interesting to hear these things, and I catch things in passing. I'm in her office all the time, but you do a really good job of, helping your people, building it up, meetings, accountability. Your agents all love you. They call when there's a problem, and you're very transparent. You don't hide a lot of things, which I think is just a good starting point for anybody.
Yeah. So I want to just touch on this, at this point, is that it wasn't always like this, and in the beginning, there was times when we had, 5, 6, 7, up to like 8 loan officers plus me. And I wouldn't have been comfortable at that time sending my agents to the people that were on my team. And I mean, I look at this from like in my partnerships with agents and with the people that I hire, would I let this person take my client? You know what I mean? Like, I'm not just out there like picking up every agent, like, oh, sure, you want to work with me? Fine. It has to be, do I respect this person enough in what they're doing? They don't have to be the perfect agent, but like, are they good enough to handle my client? Because if I can't refer them business, why would I want to work with them? It's the same with the loan officers on my team. We went down to 3 people at the beginning of last year. We got rid of a couple people at the end of 2022. And at the beginning of 2023 through June, there was only 3 of us. We were closing 20 to like 22 loans a month at that time. And we were happy, but I knew that no matter who called in, who picked up the phone, no matter what, if I had to send a client to one of those people, our clients were getting the same experience. So like, I would just caution people, I didn't do it probably right in the beginning, and it didn't matter because rates were low and we were on, all these leads, but like the business is so different now. Like I don't want anyone on my team that isn't at my level, period. And it doesn't have to be experience level. It has to be like how much they care about the client and how they can deliver on the experience.
Yeah. And I think that even parlays over. You've fired more agents than people have ever gotten, right? Because you're not,
Well, I don't know if that's true. I don't have numbers on that, but I don't work with agents that I don't respect.
Yeah, you're right. Like a lot of, and I think that's just for somebody that's out there trying to find agents, taking whatever you can get and just it just bogs you down. They're going to beg you for money. They're not a partner where like if somebody's not in it to win it, they're not like part of the team. You're very quick to like you'll give up a whole office if it doesn't make sense. And you do it relatively easily. Like a lot of people would torment over it. I would torment over it. I would think I could coach them up.
I mean, think about what we did. We had an office, we had a whole team. It was like 22 people. I mean, they were a drain on their loan officer. Well, you know what I mean? Like they were constantly asking for more money, like needing the loan officer. Like we're humans. Nobody can answer the phone every single time you call. You know what I mean? And you have to like, trust and respect this person that if they can answer, they will. We just dropped their whole office. And honestly, I didn't even think twice about it. And I mean, I probably should have, but like we were on a marketing spend with them for leads. I've had other agents that all of their clients were mad at their agent at the closing. So like we did 3 deals together. Every time the client went to close, they were upset with the agent about something that wasn't explained properly, or and like you always say, you train them up or coach them out. It's the same thing with the people on your team. You can either coach them to be better, or your agents. You can either coach them to be better or you can get them to leave, So, I mean, I don't even have to like verbally fire them. If I just like, kind of lay off and stop like going towards it, they'll kind of just, parlay out. They'll just move on. So.
Yeah, I think that just the way that you went and transitioned from being pure lead buy person to, it probably took you the better part of 12 months, a lot of hard work.
It was horrible. It was absolutely horrible. I mean, I did not wake up one day and just be like, you know what? Like, I would love to just start going and like begging people for business. Like, let me just go and try to like, and I remember my first office that we went to where we got like one office to agree to let us come in and do like a training or like talk about our programs. And like, I was terrified. I mean, this is not something I've like ever done. And like, even though I'm confident in my ability, I had never tried to get a whole office to do business with me, So when I think back to that, I'm like, they did, and we're still doing business with them today. So I mean, we haven't lost them. That was, years ago at this point. But, I just think like they took a chance on me, and like this team, if they ask me for something, I always go back to thinking like when we had nothing, had these teams not believed in us, like we wouldn't have survived, because in 2022, this job was very hard. You know what I mean? And I mean, you're saying like, oh yeah, you guys are like doing so good, but like I had to really stretch and get like extremely uncomfortable in order to get to that point. And like every day it was a question of, is this the right place to spend money? Is this, and like I've never ran a business before. So I mean, there's also the, profitability and looking at profit and losses and doing all that stuff. It's a lot more difficult when things are not good. I mean, the first 2 years I was like, this is so easy. I should have done this, 5 years ago, but it's not easy. It's challenging.
Yeah, and I think that often the pain of, right, there was pain associated, right? You had a massive lead spend. And I don't know if, right, like you lost 6 figures in a month. I'm sure that it was probably, you had a massive lead spend and rates went through the roof. And essentially,
we were not profitable in 2022 at all. We did not have a single profitable month in the year of 2022. I think probably post the first quarter, because we still had, rates were still like inching towards 5%, and not getting super high, but we were still spending $75,000 a month on leads. I had hired my brother-in-law too. And, he was depending on me for leads. And, there was a lot of people depending on me at that point in time. I couldn't just cut the lead spend, but I think by June, I was like, we're cutting the lead spend. If people want to leave, they can leave. I literally do not care if they leave. Like, we have to do something else. So I think in August, my last loan officer that was like dependent on the lead spend left of 2022. And then we let 2 people go, or one left and one, we let go between October and November. And 2023 was a great year, but we had to like shed all of that excess stuff and those people that were depending on that lead spend. And like, honestly, I'd be doing way better today had I not spent all of that money on leads and started making this transition sooner, before interest rates started to go up. But I still feel like we made it sooner than a lot of other people. And I'll tell you just a quick story. I remember sitting with Brenda, who was like managing the branch at that point in time. And she was like, we sat down and I was like, John and I were talking last night, and he thinks rates are going to be at 7% by the end of 2022. And I was like, what are we going to do if the rates at the end of this year are 7%? And she was like, we need to get more programs. So literally we sat there at a table at an Italian restaurant where the food's like $6 a meal. And we just wrote down all the programs that we could think of. We got good at DSCR. We got good at bridge loans. We started leading with the bridge, going into the office saying, oh, does your current team do bridge loans? And they would be like, no. And we'd be like, well, we do. You know what I mean? Like, no one ever gets one. Maybe like 1 out of 25 people get one, but it doesn't matter. We found something that these other people didn't have. We created that need. We were selling the gap, making them think, oh, hey, maybe I could use you for that. And we got a ton of business like that. So.
Yeah, and you guys are still good. We did something, the riches and the niches, but you guys have been very good about leveraging programs. And one of the things that I said we were going to talk about is partners. And I think we've touched on the agents a little bit, but you've got awards someplace there in your office as a top broker for UWM. I think you were in the top 25 last year of all brokers at Rocket. True. And you did it with 3 loan officers, where some of these companies for half the year. Some of these companies have 15, 20. Right. You go and you do speaking engagements. Matt Ishbia has called you to try and like recruit you back. So tell me a little bit, like, and I know you're also signed up with like 25 different people, right? You've got a lot of people that you're signed up with, second mortgages, bridge loans, all kinds of stuff. Like, tell me a little bit about your strategy about partners. And I don't want to get deep into the UWM, ultimatum, but ultimately you left UWM at that point and went back to Rocket a second time or whatever it was. Like, What are your thoughts on your wholesale lenders? Who do you really like out there today?
Mhm. Thanks for giving me a chance to answer this question. Um, I will probably not do business with UWM in the foreseeable future. It's nothing personal. I just am very happy with where I'm at with Rocket. I trust them enough. I mean, I never trust anyone 100%. It's like, it reminds me of like the kitchen and the wait staff, like they have to deal with each other. So like they deal with each other, but like some nights the food doesn't come out on time. Some nights the waitress has a problem submitting her order and submits the wrong thing. And like, there's always a constant like back and forth there and it's never perfect, but I'm very happy with being with Rocket currently. I know there's also people that are happy with UWM. Rocket last year paid for every single one of our credit reports, and that saved me about $6,000 a month. And like I said, we were not profitable in 2022. So every dollar that we made last year was something to propel us forward. So I will say that about Rocket. I'm very happy with them. If anyone wants an account reference, I can definitely give you one. Um, as far as the other places, we do all of our bridge loans at Windsor. And my rep. I like him a lot. We do a lot of, well, we've been doing DSCR, but like as of lately, we've been so busy that I'm not like extremely focused on it. But we do use like Lenshore, American Heritage, which we've had good experiences with, especially doing like foreign nationals or like any type of like, I don't know if it's even foreign national. It's like we have a lot of investors in Canada that want to buy houses here, and they've been really good to deal with for that. And then, we deal with Kind, who I would say is like, really good. And I think my second, of course, right now is Everstream, which John introduced me to, and they've been phenomenal. They have excellent pricing compared to Rocket, and we really needed to fill that gap of like my second typical loan person, So I would say Rocket, Everstream, Kind gets the majority of our normal loans that fall within the standard range. And then we've got those outliers that do like the bridge loans and stuff like that. But my focus with the partners is client experience. Like, I don't care about the pricing because, like, my clients are not shopping. 1 out of 50 of them are shopping. The rest of them are coming to me and they're basically taking whatever I give them. So I just want to make sure I'm giving them the best experience every single time. So if you start focusing it like that, we have a bunch of lenders for all different kinds of reasons. And a lot of them we only send this specific deal to.
Yeah, and you've really like dialed in who to work with, why the account executives matter more, I think, and I tell people this all the time, than what the pricing is.
Yeah.
You need a good company behind you. I like Everstream a lot. I send them, quite a bit of business. If anybody's listening to this and, they want to talk about different potential partners to go to, there's some that Natalie doesn't do anything with that I think are fantastic. There's a community development program that I think every broker, and you've done some of these, like $1 million.
Oh, I'm sorry. Let me say this about Champions TPO. I have sent them 3 loans. They were all over 750,000. They were all alt docs, so no income. They did a phenomenal job, closed every loan in less than 30 days. But again, that's an example of a place that we're really only using for like a specific program. So there's like, we are signed up with 20 people. It's not that hard to keep it all in line in Comergence and, be updating those. But most of them is like for one program, we send it to that specific place.
And the one thing that I get, this is one place that we get business questions. I get questions from Natalie's team. I have a weird scenario.
Mm-hmm.
John, where can we take this? It's a mixed use, this, and this. And lo and behold, like someplace inside of my brain, like I know a lot of these things. So I do get quite a few of those questions, and they do a great job of signing them up and moving forward with them. So a lot of products is something that you should know about. You don't have to be signed up with them all, but you need to understand that when you get that client on the phone, being able to quickly navigate where you would want to take that and how you would want to do it. What's the biggest, and I think that I know the answer to this, but I'm not exactly sure. What is the biggest thing that you were reluctant to offsource or to hire somebody out for that once you did, you were like, I should have done that a long time ago? I think I know what it is. I almost think I'm queuing this up, but I'm not sure.
Wait, what do you think it is? Because I honestly don't even know. Like something that I outsourced to someone?
I think that one of the levers in your business that when you did this, like you became happier when you moved over to having somebody handle your QuickBooks, provide you with financials, right? Like handle all of your receipts, all that stuff. And even if it costs $5,000 a month, I think that it would be beneficial. You pay way less than that, but once you offsource that finance function, I think that it really like was super helpful.
Yeah. So I did hire a bookkeeper. He's not a licensed CPA, but he deals with pretty much everything on like the paperwork side that like is just mundane stuff that like I don't need to be doing. I mean, he also works for my mom. So I mean, I trusted him. And I mean, I would obviously never recommend hiring someone that you don't like specifically trust. But that was a big thing. I mean, the other thing that we did is we hired an admin recently who also does our social media. So she does like the admin stuff inside of the office, like printing and, you know, sending those receipts in and chasing checks and all that stuff. And that was super helpful. And then obviously moving Evan to contract processing, which is our processor, was huge money wise. But as far as time, I mean, he still does the exact same thing. So.
Yeah. And if there is something, people often like try to step over dollars to pick up pennies. If there's something that you're really bad at and you can hire somebody else to go and do it, even if you're not bad at it, it's just not a good use of your time. Like look at those things and definitely like, as you go out and you do things, you're buying back your time. So if writing one more loan can buy you back the time that you're spending on that, you know, that's great. And that's actually advice I got from JJ Kresovic also when we first started this business. He owned JFK Lending and sold it to somebody, but he said like, you know, he was running a company doing billions a year and he was still their QuickBooks guy and would spend 6 hours on a Saturday. And he's like, outsource that fast. And so it takes you a while, but there are some functions that you should definitely look towards outsourcing. So we've got a couple of questions in here. It's from Todd. The first one, he says, are these investors making purchase closing dates consistently? Like the people that you're working with.
I've never missed a closing date. Like I have never missed one, but I will say, I'm not saying that that's because of the lender. I mean, Rocket closes things in 2 weeks, almost every single time. I don't care if it's FHA, VA, conventional. If you send them a clean file, it's closing. I will say that I have an exceptional processor who used to be an underwriter. So I'm not saying that it's, you know, it's specific to the lender, but like you have to have a very strong processing system set up in place. And no, I don't miss closing dates. And I will literally go psycho on anyone who tries to make me miss a closing date. Psycho.
And something that I would just write in working with a lot of different brokers. I've had dozens of brokers that I work with and I understand kind of their business and their pitfalls. Being super detailed up front, spend the time up front to submit the file clean the first time will save you so much time in the long run. It's not, and it's something I kind of almost have to ingrain in brokers. They want to just throw it in, see what sticks and get the underwriting conditions like they still work at guaranteed rate or something. And well, it works inside of a lot of companies, right? Like send it down to the folder receive team just to see what I'm missing. Well, when you send it to these wholesalers, that becomes a black pit where your file just sits and it stops. So
there's some other things here too, though. Like you have to set the expectation with your real estate agent for every single client. So like, hey, this client has a 588 FICO score and they're going FHA and, you know, it's not a good deal. I'm going to need 40 days to close it. You know what I mean? Instead of, I feel like sometimes we get in the mood to, and Todd, I'm not saying that you do this at all, but you know, they'll be like, can we do a 21-day closing? And like, I want to keep this agent happy and I want to keep them sending me business. So like, maybe I'm setting myself up for failure without setting the right expectation with them up front. But like, I don't have a single agent that submits an offer without CCing me on it and speaking to me about it before the offer is sent in. I have trained these people that like I am to be spoken to. I will be reviewing the taxes, like everything that's going into this before my client puts anything on paper. We will make sure we have the right concessions if they need them. You know what I mean? So like, you know, a lot of it is like if the agent has control, they will destroy their deal and then they will blame it on you. You know, like you have to be in control up front of saying, this is what it is. And I tell all of my clients, I want to speak to you verbally about this payment before you make an offer on this house. Because, you know, 30 days could go by, rates go up by 0.5 point. Maybe they're not comfortable with the payment anymore. So like, I'm very controlling basically from beginning to end on every single deal.
And one thing that you are very good at, your agents actually use you in a different way than a lot of mortgage people get used, right? A lot of agents think that your mortgage rep is somebody that gives you a pre-approval. For your agents, you're actually their closer. Like I know, like I think so-and-so is going to make an offer on a house. And then they call you to like actually push it over the edge. You call them, hey, I heard it's a great house. And you're working with your agent with a common goal of signing more purchase agreements and closing more loans. Your job is not to issue pre-approvals. It's to actually help people buy homes. And I hear it all the time, right? The agent calls you, Natalie, I think they're going to make an offer. And then that's going to be great for your family. You got 3 kids and 2 dogs, and you're going to be able to have chickens. Like I hear you selling them. Is that like an expectation? Do you even leverage that with your agents that you will be their closer?
John, you know that it's my natural inclination to be the salesperson, but let me give you an example. I have this agent. We've been together for 2 years. I've done all of her business. The other day she calls me and she's like, our client Mandy, they didn't want to accept 270 on this house. So they're looking again. And we saw a house this morning and like they hated it. And I was like, okay, because a lot of this is instinctual. I said, Heather, you need to go and send Mandy an email and say, hey, I know you hated the house this morning. I think we should revisit that other house. So she puts us on a group text and she says to Mandy, I think we need to go back to that house that you said 270 was like too expensive on. And what do you know? Mandy had already talked to her husband and was thinking she wants to go back to that house. So it's just how I am. I can't, I don't really know how to not be that way. But if you have that sales instinct and you build the trust with the agent up front, you have to provide value to them, like you're saying, in a true partnership. It's not about you send me the client, I send you the money, or you know what I mean? Like I have to provide value in other ways. Otherwise, they'll just leave. I think that Mortgage Marketing Animals one time said that the typical time that you will keep an agent partner is 2 years or less, and just like with my employees, I'm not trying to build a 2-year relationship with anybody and go dump a bunch of money and time into something. So I view it as we are together. Me and you are basically married, not me and you, but me and this agent. And our job is to get these clients over the finish line, whether I'm giving the feedback or if you think there's something that needs to change, we're constantly giving ideas. And when you pick up an agent that's newer, you have so much ability to impact their business that they will never leave you. They will never leave you if you're good.
Or they leave and they come back once they realize that the person that they the greener grass was really kind of brown. So I've got another question in here. Can you repeat your LOS, CRM, POS that you use? I can actually do that, right? That you use MLO Flow as your
CRM and POS. Yeah. And then Lending Pad is the LOS.
And something interesting here, if anybody has questions about this, I have literally sat through thousands of demos. We have something that we use on our end, but something that's really cool. Natalie mentioned Flowify. Flowify recently came out with, and I'm actually doing some stuff with Flowify as a company, but Flowify recently launched a LOS to where you can have a POS and LOS all in one. That's all Flowify. That's really, really cool. If I was a new broker, it would be something I would be thinking about. I'm actually looking at maybe moving some people over there. And then the CRMs, there's a lot of them and you use a couple of different ones, but the CRM is a really cool thing. Then there's a question about Banking Bridge. Somebody wants to talk about what Banking Bridge is. You can go to brickfg.com, which is Natalie's company's website. You can see how it works in there, but it's a really cool widget that allows you to have live real-time rates in on your site. And if you want a recommendation in there, I can get you right with the right person. Send me a message. I can get you over to Banking Bridge. And if you're going to try and buy leads, I think Banking Bridge is essential to have on your page. And then there was a question about BotSplash, and we do not use BotSplash. Aru over there at BotSplash is awesome, and it's a cool tool. We just have not used it, but there is those systems are great. And there's so many, you just have to get the systems to work together. So Natalie, we're kind of running close on time here. If we could go step back and you had a magic wand and you were forced to be in the mortgage business, but it was brand new. You had to start over. We're going to give you 25 grand. That's 15,000 to open your Michigan license and 10 grand to get started. What would you do differently today if you were starting a brand new brokerage? What would be your first 90 days? Where are you going to spend your time? What are you going to do?
Well, I would hire someone else to do my licensing for me because that was a huge pain in the butt. And I had licensing experience before, so I'm good at it. And trust me, it was not easy. So that's one thing. I also probably would start with an all-in-one LOS, POS, and CRM instead of, I mean, I kind of got stuck in my situation because I already had an LOS that I was fine with, but I'd probably try to keep all of those merged in the same place as possible. And you know what they say, like, keep it simple, stupid. Like, I probably wouldn't have got licensed in as many states as I'm licensed in today. I probably would have just focused on, Michigan, probably in Ohio. So like 2 states that do a lot of business together, or Michigan and Florida, and really focus on that because it's so hard to get business right now outside of your state with agents when there's not a lot of like refi business coming in. So maybe not as many licenses, definitely wouldn't have hired as many people right off the bat because remember that was an absolute disaster. Cost a lot of money in payroll. I probably would have started smaller, and really like focused in. Also, I would have hired an assistant a lot sooner as far as like a production assistant. I cannot possibly run this business and close 14 loans without my girl Stephanie. So if you're out there, this is a shout out for you. She does all of my inputting of information after I speak to the client. She runs the loan through automated underwriting systems. If I need to move a file from one lender to another, she moves it. So like your first hire should be someone that's going to help you like make your life easier before you go picking up other loan officers, truly.
Yeah. And there's some like virtual assistant companies that we work with that are just really like top notch, relatively inexpensive. So if somebody's looking at getting in that space, we just do a lot of stuff over here with the broker builders that kind of delve into all this. And I think it's great having you, right? Like I get every single day, I get a case study of what's good, what's bad, things that I would do. And we do like, you do things completely different. Like you do stuff that I think is like, I would never do that. But yet it doesn't make it right or wrong, right? Everybody gets to do what they want and they have their own approach and collectively like.
One more thing.
Yes.
We did not start doing anything on social media for like 2 years. And like I would have 100%, if going back, I would have started with a brand package, picked my fonts, picked my text, and had a virtual assistant or whatever posting stuff on social media for me, liking people's stuff, gaining followers. I mean, we're doing very good at it now, but that was a hard transition to make. And by the time we tried to make it, we really didn't have enough money. So if I could, I would have started that day one and really put a lot of attention to driving leads from there. So forgot about that. I mean, basically everything we did, I would have done differently. Social media, processing, I mean, pick something.
Well, yeah, I mean, Calyx was not a great call.
It was horrible. It was we had to pay someone to do our call reports for us because Calyx couldn't even do call reports and get them into the right format. Do you remember that?
No, I know because I was the one that had to do all of the data. It would take me 8 hours to do a call report to report 36 loans.
Takes me 20 minutes in Lending Pad. 20 minutes.
Yeah. Now, there's so many little just subtle nuances, but I think that the one thing that's interesting, and I think that over the course of a week, like there's 3 times that Natalie's like super happy that she owns this. And there's 3 times a week that she right now in this market, she's like, I'm done. Like this is stupid. I'm selling the building. We're selling everything. And we're like, going to like go and move up north and work at McDonald's or something. So it's just part of the ebbs and flows. Like you have high highs, low lows, but ultimately you're responsible for everything at the end of the day. Like, do you regret starting it?
No, I don't regret it at all. And I'll never work for anyone else again, but I do want to quit like every day. I've done like 15 restructures of the way that the business operates to like get better with whatever the market is. And like, it's such a hard business because the market controls so much of your ability to do business, like I can't churn my business from 2 years ago. I've never been in that position where you go, this long without having any type of reduction in interest rates. So like, I don't love that I have little control. Plus I'm working very hard. I'm in the office every day from 9 to 7. My kids are with a nanny and I'm working harder than I've ever had to work to make money. I'm still probably not making as much as I did on my best year, but like, I would just encourage everyone that this is making us all better, and like, even though we're closing loans and we're making money now, it doesn't mean that it's going to be like that forever. So like the next time that those rates go down, you better be ready to like not see your husband, your children, your family, anybody, because, I guess I feel more appreciative for like the make hay when the sun is shining, which we did used to say back in the day, but it's never been this bad. The last 2 years have been completely insane.
The last 2 years have definitely been difficult, but the one thing if you're working for someone else, right? Like you've had months where you made 0, you've had months where you've lost, but you've also, right? Like it affords you the opportunity where you have months that you make, you have 6-figure months, right? So like there's a wide spectrum there.
They're
And when
just those 6-figure months are so few and far
so far in that
between,
they're so far
like
in the
I don't
rearview
even
mirror.
remember those months anymore because they're so far away, that it just feels like, it's hard to just the carrot keeps dangling. You know what I mean? Like every time I think rates are going down, Barry has lied to me, the market has lied to me, investors have told me rates are going down. Like I've been lied to so many times. I'm just like resigned to selling 8% for like the absolute rest of my life. And hopefully the rest of the people on this call and watching this have just given up on rates going down because it's like, just pretend it's never going to happen and do the best you can.
Yeah, but it's a progression. And I know that, in 10 years, if you go back and look at the trajectory of your company, right? I remember our first check that came in, right? Our first closing, right? Like, so that was, if you look at the trajectory over a 10-year thing, the growth will look like this. While we're in it today, it's all these peaks and valleys, but I don't know. I'm super proud. I think that what you've built is, phenomenal. It may not feel like that day in, day out, but having your bankers on average, 6-7 closings per loan officer last year, when the average loan officer was less than 1 closing a month, being just where you fall inside of these rankings, these different things, your agents love you, best of Oxford, the Mortgage Mom Squad, all the different things that you guys are doing. It doesn't always feel like it's glamorous or cool, but you guys are doing a really good job. And like, proud of you. I talk about you guys all the time. So thank you for being an inspiration.
Oh, I'm inspiring you now.
You do all the time, right?
Okay.
Like I see what you do.
Okay.
Like you come in and you get it done.
Yeah.
So,
well, thanks for having me, you guys. And if anyone has any other questions, I mean, pretty much everything we talked about, I know this is going to be recorded, but like, feel free to send me a message. I can't say I'll respond same day, but I'll respond at some point.
yeah. And she's Natalie at brickfg.com. You can I'll link everything up in the show. What are you guys, are you the Mortgage Mom Squad on Instagram?
It's at Mortgage Mom Squad.
At Mortgage Mom Squad, and has really leaned into that. That's their brand is, it's working moms, helping working moms. Right. They've got a great little brand they're doing, the best of Oxford. You sit on chambers, you do a bunch of other things outside of that. So anybody wants to talk to me, I know a lot about this woman. I see her every single day, most days, and feel free to reach out. I'm here, and that's it. I appreciate it. Thanks,
guys. Have a good day.